What do you want this place to be?
I want it to be number one, not in the region, but in the world.
We just finished Q1 2025 and the Dubai real estate market has again been showing signs of strong growth. However, 2 days ago, Bloomberg said it's showing signs of strain. Now let's look into the information now that comes from my real estate team. I'm not a broker, by the way, but I have access to the team because I'm invested in the market here. Many so-called experts said don't be invested in Dubai. Again, if depending where you bought and when you bought, we can decide if you're a good investor or a bad investor. But let's get into the information. I'm going to explain what I know about real estate, what information we have about real estate, and where we stand today as we go into 2025 Q2. Hi, this is Jeremy from the Millionaire Migrant. Here in this channel, I bring together all the resources that I have at a top level of citizenship, residency, tax mitigation strategies, and investment opportunities, real estate and non-real estate. And here today, we're going to see what's happening in the Dubai real estate market, which has been an incredible real estate market as we enter into Q2 and Q3 and Q4 in 2025. So I pulled up some information from my real estate team. So I have a legal team because obviously when we do complex deals, big ticket deals, we have a legal team. We also have an analytics department as well that pulls in various resources, usually paid resources that I can get here. And then also have a brokerage team that handle my portfolio and my client's portfolio. And clients like this because we're essentially advisory. I'm not sure if you're aware, but in the UAE, and this is common in other parts of the world, especially in the United States, realtors are essentially freelancers, they are self-employed, and they work on commission only. So it goes against your best interest because they need to keep their family fed, and they need you to transact, flip, buy, sell, lease out, and so on. And so with here, a lot of our clients, my high net worth clients that I've been looking after for over a decade now, they come here because they know I can get impartial advice. I can even show my own personal investments, commercial, residential, land, short-term, long-term flips, and renovated flips. Sometimes you could just flip without the renovation as well. So, but we also look after other countries. I'm not UAE centric. I've invested in 10 countries, more than 30 properties. And this year I'll be looking to do another 2, 3 this year, probably maybe 4, give or take. To talking about Dubai right now, we want to look at some of the numbers here. So first of all, we want to say that the first quarter of this year, property prices and transactions were going up again. If we look at it year on year, and let's look at the luxury segment because there's all different types of segment, but today we're going to talk a little bit about the luxury because ultimately luxury segment tells you a lot. It shows a lot how much confidence there is of people to put money to work in the UAE, but it also shows that those people, if they're also moving here, those are people that are wealth creators. So they are going to be self-employed or high net worth, people who put their capital work, and that gives you more of an indication of what's happening. If we look at it, we will see that the price of properties over $10 million, so that's what, 36 million dirhams, went up just in the first quarter as a year on year from the previous quarter at 5.7%. If we look at the ultra luxury, which is $25 million, it went up 33%. Now, I'd have to caveat this in saying that at that level of investment, you're talking about 10 houses, right? So, the sample size is small, so I wouldn't use this as an example. But it did say that a lot of the location of Palm Jumeirah turns up a lot. The reason being is that at that particular price point, it's one of those places that has seen the most transactions because it fills up. It's a large volume. It's a large land mass. If you look at the fronds that are on the Palm, compared to the ultra high end locations where there's not a lot going on, but also because it's older and it's traditionally one of those places that has older high net worth locations where people buy. People are renovating those properties and selling. So then again, you'll see there's a lot of flipping going on, which has slowed down a lot now, but it's still very active. What I've noticed here is another thing is that at luxury listings, there seem to be less and less. And I think that's because people are asking a lot proportionate to the intrinsic value of that property. What's happening is that because everything is a seller's market, sellers just saying, oh, he was sold his for that one, so mine's worth this. And that also slows down transactions because it means that there's a disparity between the buyer's expectations and the sellers. But it also means that there's not enough supply coming on the market, which in turn drives down the price appreciation metrics. Another thing we notice is if we look at the communities, the usual communities they're talking about are the top tier communities. There we have a lot of transactions, and I'll come to non-luxury in a minute. here in Millionaire Migrant, I really want to make sure that we're helping everybody in the market. Yes, I've been dealing in the high net worth and ultra high net worth market through the portfolio advisory for real estate, which I've been doing, which wasn't public, but now I'm going to start talking about it publicly. I've been doing that on the side. I've invested in properties since I was the age of 23, but we also look after ultra high net worth investors for our second passport, second citizenship, and residency, golden visa, tax residency department as well. So I want to look after the other different demographics, which is your digital nomads, your guys just starting out on your journey, working from home, your hustlers, your entrepreneurs. I'd really like to try and take care of that market, because I was also that person once as well. I'm not a rich kid. I didn't come from money. I didn't have mom and dad who have the really big businesses. And I know that what it was like in that situation. And I'll be talking about videos more about my personal journey as well. I think it's a bit different to a lot of people's life growing up, but I also know a lot of stuff online, whereas everyone turned into, started their business with $100. And look, to be honest, I've met some of these people, and some of it I do think it is a true story, but a lot of it is just make believe. I mean, you can say whatever you want on YouTube. So I'll be sharing my stories, and hopefully you'll see from the the way that I explain the stories that these are things that you can really make up. Coming back to here in the real estate, the key things to take away from this is that you see, I believe that there'll be a correction in the market, not in villas, but in apartments, and specifically branded apartments. There's been way too many launches of that going on right now. The price they're selling out, forget about luxury, the regular apartments, the launch prices are going up and up. And the reason being is they look at what's available in the market. They say, well, you know what, I'm giving you a payment plan, so I should be able to charge a little bit for this. And what that does is that this creates a vicious circle, whereas when they record that transaction for a property that is not yet ready, for a property that is charging a premium because you're doing it on a payment plan, when that transaction gets recorded, it then goes in as that is the average price per square foot in the market. So then the next developer comes in, and the next person who's trying to sell his property is like, well, that's what I've seen, therefore my property is here. So we've got this cycle going on. I've offloaded a couple of my assets recently, tried to get to near the top, but I realized like almost near the top is just as good, and I had a really good return on investment. I'll be mentioning more of these transactions when I come out with my real estate investment guide, which is all the experience I've had working as an investor, but I have also been working in my career in real estate for a very long time in a lot of countries. So I'll be bringing both of those viewpoints together to help those of you when you're just starting out your journey, or maybe you're a sophisticated investor and you just want to know more about how it works using the same model and applying it in different countries. But I believe that there will be a correction, which is why I've offloaded my apartment, which is in my portfolio, and I'm also looking to offload a villa. The villa I'm not too concerned about. The reason being is that I'm still going to make good money on it, having done nothing at all for the last year or two. But I do see that be softening. I still think it's going to be good. Villas is not going to be affected, but I see residential as the place where so many developers have been building. When it comes to my commercial, I'm not touching that. And then I have other assets, trophy assets and so on, which I'm not looking to do because you can do a lot more with, commercial. Like obviously in residential, you can do an Airbnb, you could do a short term, you could do a flip. There's a lot of variety. But with commercial, you can do lots of different things. I mean, essentially a commercial property, an office, for example, is where you'd host a business. Therefore, you can create a business. I mean, I'm sitting in one of the properties that I own right now, which is Podset, which is a podcast studio, which was, if I could have just rented out, I could rent it out. But knowing that I know a lot of people in Dubai and say, you know what, let me turn this into a business. The rent is essentially rent free, but seeing as I own it and I'm, in a bracket that is taxable, I'm going to rent it to me at a very high price. So that's another thing that you'll be able to learn when you follow these videos. Another thing that is really important is that Bloomberg is saying that this is going to have a softening effect. And I don't disagree. There will be a softening, and there had to be a softening. But a softening is better than a correction. I mean, look at what's happening in the financial markets. We're literally back where we were 6 months ago. Actually, even more. You could even say even 9 months ago, depending on where you invested. But if you look at the whole the whole market as a whole, you're between 6 and 9 months back to where you were. So any of that money invested, provided you didn't invest more recently and at the peak, you're down. But if you look at real estate, and again, one of the reasons I love real estate is that it has a lot of different things that other asset classes don't have. You do need to be diversified. I'm definitely diversified. I bought a lot of gold in the last few weeks, and I've been buying it even 6 months ago. Bitcoin as well, even further back. But the real estate can do things that these others can't do, and I'll talk about that in a separate video. But if we look at the nationalities of investors coming here, this explains a lot why there's still a lot of upside potential if you're thinking medium to long term. I think we're going to be in for a wobble. You heard it here first. Summer is when you want to be buying. Don't be buying now, it's too soon. Everything's been a bit choppy. I think everyone was glued to Bloomberg for the last few weeks, but you're going to see some opportunities. But if you look at the summer is when you're going to be getting good deals. That's when I get my good deals. But if you look at the market share by nationality, this is really interesting. Russians, 28%. Everyone was saying, oh, the Russians, now everything's calm, they're going back home. Looks like they're not. This is according from official data. British, 15% of the market are British. Non-dom. Very simply, 2 words, non-dom. And then even if you expand on that, even people who weren't doing the non-dom, the UK is in a really bad place. If you look at the news that came out, economic forecasts have had to be shaved by, off the top of my head, about 30% down. Economic forecasts are coming down for the UK. So that's not really going to motivate people. I mean, they've introduced new taxes or cut away tax concessions. UK, that's why. Indian, 12%. This is one of the positive reasons where Bloomberg say it's going to be correcting, but there's other things to consider. If Indians now make up 12%, India now, if you look, it's very clear that India has come out a winner in this whole trade war, right? They've come out very strong in this. Their stock market is doing really well. And Indians, if it's one of their most popular places to invest as a property outside of India, and by the way, Indians are really into real estate and gold, they're doing it here in the UAE. And so that will give some upside protection to the UAE market. And then you've got the Chinese. Always welcome to have Chinese investment. It's 1.1 billion people, if not more. And then you've got the French. French is not the biggest country in the world, but they are investing here because they are in Europe, and Europe is in a bad shape. That's why I offloaded all my European assets in the last few years. There's tax everywhere you look. It's just killing. It's killing risk taking. Like, you want to risk, right? You're an entrepreneur. You want to take a risk. You're an investor. You're taking a risk. Where's the upside if tax is coming in? So I think there is going to be a correction, a mild correction, depending on the asset class and depending where you bought. There's some locations that will outperform, but I think there are also reasons for this, which is the Trump tariffs. Obviously, you've got the developer profit margin shrinking because of the inflation on the cost of goods, cost of labor, but also now that you have the supply chain disruption, that is also going to affect the raw materials, which is going to affect construction. That might be a positive thing because it means that it will slow down a lot of these handed over units, which are creating the whole supply demand imbalance that we're expecting, which is why we're expecting one of the reasons we're having a correction. But the fact that they will have this delay means that some of these properties won't be handed over in the next 1 or 2 years and might be pushed back. If you've already invested, you're going to be a bit stuck. But for those of you worried about too much supply, it's good news. The price of oil has come down sharply. This is also going to have an effect here. I think the opposite side of this is Dubai's pro-business. In terms of hedge funds, it's dollar denominated dirhams, so you're going to see a softening there on the currency, which means there'll be more Europeans buying here. It's tax-free. It's making everything very simple in terms of opening companies, family offices, external asset managers, hedge funds. I mean, they want your capital here. MillionaireMigrant.com. You need to contact us if you want to have impartial advice when nobody's trying to sell you. You can jump on a consulting call. You can sign up. We'll be sharing some guides to come soon as well. But largely speaking, there will be a choppy summer. There'll be some great deals if you want to invest. I'm already positioning myself to do that. I'm offloading and creating some liquidity. But I would say longer term, if you've already missed the boat, you can still get involved in this summer, and there's still medium to long-term growth to be had. I'm still very much bullish. I'm still overweight the UAE. There's still things that this country has that other countries don't have. And I really laugh at all the other people who said, no, don't the UAE because there'll be a crash and there'll be a correction. There will be a correction this time, but it won't be the last time. Golden visas, crypto-friendly, digital nomads, co-working. I mean, you can't get any office space. There's not enough office supply. There's loads of co-workers. People can remote work here. It's tax-free. They're making legislation easier for companies to open companies here. Green visas, golden visas. You can have also external asset managers, family offices. All of the legislation is pro-business, making it easier to set up here and lower cost to set up here. Which other countries are doing this at this level where capital is going? I'll wait for the answer. I'll be waiting a long time. I hope that you found this video as useful. Hopefully you're on the right side of the correction and not on the wrong side. If you're on the wrong side, you know who to come and listen to next time. I'm not the biggest guy in the world. I'm not the smartest guy in the world, but I do this a lot, and I know a lot, and I have an access to a network which most people don't have, who are, whether it's Dubai real estate or not, they are the top of the game, and I get access and I benefit from this, and I'm willing to share this with you. Thanks very much for watching. I'll see you in the next video.